Welcome to this video. Today we're going to talk about super microcomputer. SMCI dropped over 40% in the last month and there's a lot of panic around this stock. In this video we're going to do a deep dive stock analysis. We're going to find out whether this is still a great fundamental company and whether right now is a massive buying opportunity. So without further ado, let's dive right in. It's now Friday, 14 November, and SMCI is trading at $36.56. And you can see that it collapsed here from the previous high to down over 40%. And now it seems to find a bottom after capitulation. And if we go zoom out on weekly candles, we can see that it's still above the 200 EMA. I think it kind of founded support here. So technically it looks pretty good. It's above the 200 EMA, that the overall trend is still up. So what does Supermicro actually do? They're essentially making supercomputers that power AI systems, data centers, and cloud. They are the key component in the infrastructure of future AI. In simple terms, they make the hardware for the modern AI and data centers in the world today. Before we invest in SMCI, we need to know whether this is a strong fundamental company. And we are here on Guru Focus to get a quick overview about the financials. And we can see here we can see that the financial strength is an 8 out of 10. The profitability rank is also an 8 out of 10. And the growth rank is a 10 out of 10. Here we can see, for example, that every year they make more and more revenue and net income. And you can see that it goes exponential because the demand for AI infrastructure is insane. Many companies need data centers, supercomputers to power all their AI and their cloud services. And they all come to Supermicro Inc. They're essentially increasing their revenue and net income every year, which is great. It's a good sign of a great company. And we can see that the cash and debt levels all went up, but they're still one-on-one, so it's fine. No worries here. In the income statement, we can see that the gross profit is around 11% and the cost of goods sold is 88%. So to produce these products and make these products cost a lot of money. But still, every year they have a positive net income, which is great. In short, I think this is a very strong fundamental company. So why Supermicro shares are plunging today? One billionaire hedge fund manager, they sold their stake because they were concerned about declining profitability and rising competition. And they're really focused on the profitability of the company and the margins. And they are not super high, but they are profitable at the moment. And that's already a great thing, because when we are buying this company, we are buying this company because we're betting on the future. And I really believe in SMCI. I think in the future they will be much more profitable. So let's do a quick SWOT analysis of SMCI. SWOT stands for strength, weakness, opportunities, and threats. So the first strength is that they have a strong NVIDIA partnership. They buy the cards from NVIDIA to build their computer systems. And that is really good because NVIDIA is the AI leader at the moment. The rapid revenue and market share growth, the revenue is growing exponentially. So they're also the leader in liquid cooling and green computing. And they have a building block modular design. And that's what makes them unique. So the weaknesses is that you could say that there's a lot of volatility in the stock. And that's why you should not go all in this company. And there's a high dependency on key suppliers like NVIDIA. I don't think that's too big of a problem, but it's true. And they have lower brand recognition in certain ways because not everyone has heard of SMCI, but most people know Dell, for example. And they have a historically concentrated customer base. Opportunities: massive generative AI market boom, green computing and data center efficiency, international market and enterprise expansion, growth in edge computing solution. They will profit from the AI boom. Everything is becoming AI and we need the infrastructure, the hardware to run all these data centers. And that's why SMCI is very crucial for many companies. And the threats, CPU and key component supply constraints, intense competition, geopolitical tensions, and trade risks. So this is the SWOT summary. I think one of the biggest risks of this company, competition. However, overall, I'm very bullish on this stock. I think there is a lot of opportunity and it can really ride the AI boom and profit tremendously in the future. SMCI is a strong fundamental company, but is it undervalued? we're going to use a intrinsic value calculator based on Warren Buffett's owner earnings. It's a discounted cash flow model, and we're going to discount all future cash flow to present value, and then we're going to find the true value per share, essentially. I filled in all the numbers, and you can find all the numbers here on TradingView or other financial websites. You go to statements, and you have the income statement, balance sheet, and cash flow. For example, you can see here the net income in the last 12 months, TTM, is $0.792 billion. So we are now looking on Finviz as well, and we can see that here the earnings per share of the next 5 years is estimated at 19.4%, and in the past 3 to 5 years it was 46 to 59%, which is a lot. So in the past it has grown a lot, the earnings, and now they estimated a 90% growth rate. So I think 90% is pretty conservative, and we can use this number. So we're back at the calculator, and I filled in all the numbers, and I found them on TradingView and Finviz. And for the earnings growth rate for the next 5 years, we are going to use 19%. Let's calculate. So here we can see that it's undervalued by 44% based on this calculator. And the potential upside is 80%, and the intrinsic value is 39 billion. And it's significantly higher than a market cap of 22 billion. So the true value per share, $66.88. So we're back at the charts again. We know that the true value is around like $66. So let's be conservative and let's put it on $60. So we can put the true intrinsic value here on around $60. That's conservative. And it's now trading at $36. And it's close to the 200 simple moving average. And it's kind of finding support here. So this could be a great buying opportunity. I personally bought more shares because I'm bullish on this stock, and I'm willing to hold for at least 5 years. And I think there can be a lot of upside for this company, which I'm very optimistic about. I hope you learned something today. Of course, always do your own research. Like and subscribe if you want to see more videos, and I'll see you in the next one.